So guys, welcome back to our channel and welcome to the WuBlockchain podcast. For the latest blockchain and crypto insights, please subscribe to WuBlockchain on YouTube and follow us on Twitter. Stay informed and join the conversation. Today we are with Brandon, and he is the co-founder of Layer3. Brandon, could you please briefly introduce yourself and the project to our audience?
Sure. Again, thank you for doing this. And my name is Brandon Kumar. I'm one of the co-founders at Layer3. Just quickly on my background, I started my career on the investing side. So I worked at a firm called Accolade Partners, which is a large alternative asset manager. They're actually one of the largest investors in venture capital broadly. So the firm is about, at this point, 24 years old and had invested in Excel and Andreessen, Kleiner Perkins. And when I was there, I spent 6 years, but in the later part of my time there, I helped the firm build their crypto practice. And this was 2018. So that was how I got into this space, primarily on the investing side. I was a big fan of a tech writer named Ben Thompson, and he was putting out a lot of work around aggregation theory. And the basic premise that I had kind of concluded was that there was a market for a project to come in and effectively act as an aggregator and connect the two sides of the crypto marketplace, one side being protocols, the other side being consumers. Around that time, I had connected with my co-founder who was thinking about a very similar problem and had actually already started Layer3 under a slightly different product idea. So I spent a bunch of time with him out in Los Angeles, and we decided that we were really complementary as co-founders. And so we started the business in September of 2021. And so Layer3 today, the best way to understand it is it's a two-sided marketplace. We call it a decentralized distribution network. So we work with a lot of the largest Layer 1 and Layer 2 ecosystems to help them acquire users on chain. And then on the other side of the marketplace, we have a very large audience of consumers, about 4.5 million active users, who come to Layer3 primarily for discovery. So we act as a great resource for them to find protocols that are relevant to their needs and interests. And they can spend a lot of time on Layer3 exploring DeFi, AI-enabled projects, NFTs, gaming. And in doing so, they get to earn ownership. So I'll go ahead and pause there. Hopefully that gave a nice overview of the project.
Yeah, sure. Actually, I think the name of your project, Layer3, is really interesting because obviously it's a public chain, right? Why it's called Layer3?
Yeah, it's a great question. When we started it, there were Layer 1 and Layer 2 blockchains. And our premise was that the most important and the most value accretive layer is ultimately the human layer in crypto. At the end of the day, none of this will really be worth anything if users don't use it. And so we started it basically with the premise that we thought Layer 3 was the human layer, right? It was the community around a specific project. It was the users touching the protocol. And it was the most important, part of the stack. That was sort of a play on words. Obviously, since then, actual Layer 3 blockchains have emerged. And, at the end of the day, we'll take the SEO, but we still believe that the most important value will accrue to, the community and the users that are actually using these protocols.
So, in my interpretation, that Layer3 is emphasis on the community, the user.
That's correct.
Yeah,
that's correct. Yeah, our Layer 3 is primarily, at the end of the day, what we're doing is we're helping users connect with protocols. Yeah. And everything that Layer 3 does is downstream of how we make the consumer experience on Layer 3 that much better. And that's why I think the name, is so powerful, because the most important layer in crypto is ultimately the users.
Yes, I totally agree with you. So Layer3 has worked with several notable projects like Uniswap. Could you share with us some interesting stories of this collaboration?
Yeah, we're fortunate. We're fortunate in that we've now collaborated with some of the largest and most notable projects in the ecosystem. So that includes Uniswap, includes Linea, Keiko, Base, and just many great teams. And the way our product works is we work with Uniswap or Base or Linea to help them reach and acquire users on chain. And we're able to do that because we've built a really large consumer audience. And the consumers on Layer 3 come here for, as I mentioned, discovery. And in doing so, they also earn ownership. And there's a really powerful flywheel there. So let me just quickly explain the flywheel. When Layer 3 acquires users, that makes it much easier for us to go out and work with Uniswap. Why? Because, we already have, close to 700,000 users using the product every month. And then when we work with Uniswap, that then attracts more users because more users want to explore these Uniswap activations or these base activations or Linea. And so then we get a larger audience. And then once we have a larger audience, we're able to then go back to the projects and sell them on even more. And so there's that really powerful, almost self-reinforcing flywheel that exists between the two.
Yeah. So who is reaching out? I mean, it's like Uniswap reach out to your team.
Yeah. And so in most cases, it's inbound, actually. So layer 3 today receives inbound requests from roughly 5 protocols each day, which is really great inbound. But yeah, in the case of both Base and Linea, a lot of these teams had reached out to us to understand how we could go about supporting them. And that was how it came to be.
Okay. So also I want to know, because back to the user basis, that how is the community, layer 3 communities different from other communities? What do you think the biggest age of your community?
Yeah, so look, the value prop that layer 3 offers is the ability for consumers to earn ownership in protocols that they actively use. And I mentioned this earlier, but because of that, there are real network effects at play. If a user uses layer 3, they know that they can touch 31 different ecosystems, meaning they can touch 31 different blockchains, and they can touch over 500 plus protocols, many of which are issuing token rewards through layer 3. And so that enables us to build a very large audience. But what it also enables us to do for protocols is to attract really high quality users. And so the way I would describe layer 3's audience today are users who are relatively sophisticated on chain. They have higher wallet balances. They tend to be more retentive within a product. And that's one of, I think, our biggest selling points, which is the ability to help teams like Base reach high quality users.
Okay. So because I also want to know, because there are some, seems to be a paradox on the task platforms, because a lot of projects use task platforms to attract more users. So they often attract that symbol like beginner friendly users, but the over symbol like tasks can easily attract like large number of both users or Sybils. How did you view this like issue?
Yeah, I've got a ton of thoughts here. So I think first is the misconception about layer 3 with respect to user quality. So there are a lot of, as you put it, task platforms that encourage users to do things off-chain, follow someone on Twitter, join their Discord. And to be blunt, most of those tasks just attract bots or Sybils because at the end of the day, there's no economic cost. Now, most of the actions on layer 3 have an economic cost. You need to do an action on chain, and then you also need to mint a credential. And so that has enabled us to attract an audience that is really high quality. Now, with respect to the type of sophistication, yes, we do have very beginner level actions. And when you're on layer 3, you can sort by beginner, intermediate, advanced. But we also have very advanced actions, things that are guiding, even more sophisticated on-chain participants to really benefit from some of the more nuanced and exciting protocols that are out there. And so I think that we do a good job of catering to both the beginner and the more, sophisticated on-chain participant. We also do a really good job of curating multiple verticals. So I think a lot of these task platforms tend to skew primarily towards just DeFi. And we do a good job of showcasing DeFi, but also gaming and NFTs, a lot of these AI-enabled protocols, getting them to and from different layer 1 and layer 2 blockchains. And in particular, the area that we've more recently begun entering into is the creator economy. So helping users mint and discover really interesting media on-chain. And so I think what layer 3 really benefits from is the fact that we have such diversity of on-chain experiences, which enables us to attract a really wide range of user.
Yeah, but I noticed that a lot of projects, a lot of startup projects, they want to attract users by invite user to following on Twitter or join Telegram and Discord to increase social media followers. So do you assess, or your team assess new projects to when they set up their tasks? what kind of the criteria that you will give them suggestions or you will suggest them to do?
Yeah, so we actually don't do Twitter or Telegram steps. We did it a long time ago, but we stopped doing it primarily because
Why?
we don't believe that it attracts high quality users. So look, here's what we've discovered is that if you spam users with these actions to go follow on Twitter, it creates an environment where the user, if they want to follow someone on Twitter, they're going to opt into doing that. And if you force them to do so, it is spammy. It's negative engagement. It's not the best way to build an audience. But more importantly, we view Layer 3 as a marketplace to transfer value. So if you're Optimism or you're Arbitrum and you want to transfer OP or ARB, you will transfer OP or ARB through Layer 3 if you trust that you're going to reach a real user and that user is going to do something on your network. But you have no reason to spend money to have them following you on Twitter. And so we've actually skewed away from it. So the second part of your question around, do we work with these teams to help them design really compelling activations? That we certainly do. So we have a ton of internal data that lets us understand how the best campaigns perform. And then we lean into that data to help create campaigns for all of the protocols that reach out to us that are really performant and exciting for the end consumer. And that is something that I think we've really excelled at relative to our peer group. So a lot of these other, as you put it, task platforms, they tend to be permissionless, which means anyone can show up and use that infrastructure. Whereas with Layer 3, we have a more curated approach, which enables us to create better on-chain experiences because we have a lot of data that tells us what users like to do and how you can go about engaging them.
So what do you have a preference, like what kind of action or marketing strategy you think it's work based on your past experiences really work?
Oh, that's a great question, but it ranges. It ranges so much, right? So some protocols, for instance, they really want users who have wallet balances over $100,000 to stake, $10,000 for 1 month, right? And so in that case, that protocol might not care as much about the number of users, but they do care about the quality of user. And then in other instances, we have some protocols that say the metric that matters most to them is the number of transactions. And so in that case, they are trying to reach as many users as possible. So there isn't a golden formula for the right type of activation, but what we've discovered is we understand how to achieve the right objective. And more importantly, coming back to your question around, is it all beginners? We also have variety, right? So we have some users who care to mint a lot of NFTs. So we want to make sure that we have good activations for them. We have other users that are more active on DeFi. And so we want to make sure that we create great experiences for those guys. And so it's really just a balance between the beginner, the intermediate, and the advanced, and then also trying to understand what the protocol itself wants to accomplish.
Yeah, I feel like, well, based on what you describe, I think it's a make to measure, like tailor process that each project is different. So
yeah, exactly. I mean, what you're trying to do is understand what that protocol wants to accomplish, also what kind of protocol it is, and then help them do so based on the infrastructure and the product that we've built.
Yeah. So my next question is, you recently released the milestones. So why should users be excited about this future?
Oh, this is a great question. So, one of the things that we've observed is the airdrop meta, like the airdrop process is broken, right? And it's largely broken because when users know there's an airdrop, obviously they'll use the protocol. And then there's never a happy scenario because users will always expect more than they receive. And then it also creates basically a loss on spend because you retroactively reward users for all of these things. And it creates an environment where users, where the protocol spends more than they really should. Now, what milestones enable is forward-looking. So a milestone allows you to pre-outline or predefine what actions you want a user to take and what succession. And then upon completing those actions in that succession, the user will then earn tokens. So you're now creating an environment where users understand what they need to do on chain and you're able to drive better retention. So it's more forward looking. And we actually believe that milestones as a product will replace airdrops over time because it's a far more efficient way to allocate your treasury as a team.
So I think just as you mentioned that the airdrop has created a lot of people criticize about the airdrop of a lot of projects because I feel like because the team hasn't set the standard of what kind of the user they think is valuable, that is the standard is just not clear what kind of user they want to attract. So because I know that Layer3 recently announced its token allocation, you guys allocation 51% of the total supply to the community. So how many tokens have users earned, like either directly through token rewards or airdrops on Layer3?
Yeah, excellent question. So just to clarify, the token has not yet launched. Will be launching soon, and we will be announcing we'll be announcing the launch date. So I guess that's some alpha. We'll be announcing the launch date soon. And the total supply that's being given to users is 51%. So the initial airdrop is about 7.5%. And the remaining amount will actually be distributed to users through features like our Milestone feature. So we also will be using this product to say, if you complete these actions on an ongoing basis, you'll earn additional L3. We actually believe this is probably the most innovative distribution mechanism that we've seen in the market, because we're able to take when you're a user of Layer3, you're able to not only earn our token, the L3 token, but you're also able to earn third-party tokens such as OP or ARB. And that I think is a really powerful model because we're creating alignment between the underlying growth of the Layer3 protocol and the growth of the protocols that use us to acquire users. And so the bulk of all incentives will be distributed directly through our own infrastructure. And it's probably the most or the largest amount, at least in recent memory, of tokens that are going directly to users.
What about the Sybils issues? What your team take and conduct any checks or take idea like strategies to go against the Sybil like attack? What's your strategy?
No, it's a great question. It's a great question. So on Sybils, we have a credential called a cube, right? So when users are completing actions on Layer3, they mint this credential, and that credential costs money. So that's one way for us to prevent against Sybil, because there's sort of an economic tax to botting our platform. The second is that we are very thoughtful around the third-party tools that are out there. So we also have an integration with Coinbase's attestation product, so we can target and reward users who have formally KYC'd. And then we also have integrated Gitcoin Passport, which enables us to reward users who have higher Gitcoin scores. And so the way we view our anti-Sybil approach is that we have more or less a menu. We've got a native solution, which is, as I mentioned, our cubes. And then we have two third-party solutions, the Coinbase attestation and Gitcoin Passport. And we'll be integrating a few others in the near future.
So is the other like project, like the build up on your team, you will assist them to do the same, like using the same mechanism, or they have their own like strategy to do the Sybil check?
No, that's correct. As protocols use Layer3, we'll encourage them to use some of the anti-Sybil mechanisms that we've built internally. And so the same anti-Sybil mechanisms that we use, we also offer to our partners for them to use as well.
Okay, that's great. So tell us more about the user cases for the Layer3 token. What the user cases now right now? Do you have them?
Yeah. So we actually announced our tokenomics not too long ago. But so we introduced a feature called layered staking. And layered staking, again, is one of the most innovative, I think, staking models out there. And the basic premise is that if you stake passively, you'll earn yield, just like if you're staking any other normal asset. If you stake and use the platform, you'll also earn third-party tokens. And then if you stake and use the platform during the course of a season, you'll earn additional L3, coming back to the milestones point earlier. So number one, staking through layered staking. The second is that there is a burn mechanism. So there are two burn entry points. The first is when a protocol needs to deploy quests on Layer3, they will buy and burn the token. And then the second is that we will be periodically using revenue generated by the protocol to buy back and burn the asset. And then the third core feature of the token is governance. So we will have an allocation that the community can govern through active governance, and that will be done primarily by stakers.
So, I'm not a finance people. So I believe that a lot of our audience have financial background. So could you give us a simple definition about the staking mechanism? Why it's what's the advantage of the staking mechanism on layer 3 comparable to other layer 1 chains?
Yeah, so the biggest change is that if you stake on a layer 1, your yield rate is primarily determined by how much you have staked, right? Now, but there's no way for you to earn additional yield by being active, simply by staking, right? So let's say I stake on, call it, and pick your layer 1, and then I'm very active on that chain. That doesn't change my yield rate. But with layer 3, if you stake, you get a yield rate that is proportionate to the amount staked, but you also earn yield based on how active you are on the platform, which I think, again, is a very novel strategy, right? Because what you're doing is you're saying, yes, you can stake and you can passively earn yield, but you can also stake, be active, and you'll earn third-party tokens like the ones I mentioned, OP, ARB, Uni, etc. And you'll earn more of L3, but it's correlated to your activity on the platform, not just the amount that you have staked. And so you're creating great alignment between the yield that the user is earning and how active they are on the platform.
So the definition of active, you mean making transactions, I guess?
Correct. Using a little bit of your contribution to the network. So how many quests you've completed, how many cubes you've minted, to then earn additional tokens over time.
Okay. Well, I think it's a great mechanism, actually. So I think my next questions for you are, I think apparently it has become quite common for projects team, they use platform marketing, the marketing strategies, and I don't know if you heard about this description for, especially in Chinese community, called the beggars. The internet beggars? Have you ever heard about this?
I haven't, but I'd love to hear maybe just a quick explanation from you as to what that community is that they're referring to.
Yeah, I thought actually it's just because that project teams do not necessarily include task platform data as part of the token airdrop distribution. They allocate only a small portion. So the Chinese community often self-mockingly refers to this phenomenon as internet beggars. So I just want to hear your perspective of this phenomenon.
So ultimately, most people in crypto have a profit incentive. So what do I mean by that? If you're trading on DeFi, right? Let's say you're an LP, right? You're providing liquidity. You're doing that because you're putting your capital at risk and you want to earn money back, right? And then there are a lot of people who maybe they don't have that much money, so instead they're contributing their time, right? They're using these protocols, and in doing so, they expect to get ownership. And I think that that's actually a very healthy behavior, and it's one of the best parts about crypto, right? Because otherwise, these networks, they wouldn't have any early users. And compensating early users for their time is actually a really novel mechanism. What happened was, somewhere along the way, the mechanism broke, right? Where teams realized that by announcing an airdrop, they can then, quote unquote, farm users for this long period of time, and they'll get a lot of users to do things. And then by the time they launch their token, there's no way that airdrop will be rewarding enough for the user, right? Because the user, in their mind, they think there's this variable chance that they might earn, this crazy outcome. So they use the product and they use the product and they use the product, and then they're always disappointed. So I actually don't fault the user. I think that where the industry needs to go is to take that energy that exists from the consumer audience and improve it from the protocol side through something like Milestones, where you're creating a transparent social contract with the user and saying, well, if you do these things, then you will earn ownership of this protocol. and it's much more formulaic. So if you provide liquidity for 1 month at this amount, you will earn ownership, versus saying, hey, 6 months from now, we're going to launch our token and you may or may not get rewarded for using this protocol. So I think, internet beggars obviously connotes a little bit more of a negative connotation, but I believe, at the end of the day, early users of protocols should be rewarded. And what we're ultimately trying to do is create a protocol that allows those users to get rewarded in a more fair way.
Yeah, I think there are no like mechanisms that can satisfy everybody, because everyone have like different expectations. But do you think there are like differences between East and West, especially like maybe culture, or I don't know?
I think that's a huge part of it. A huge part of it.
Really?
I think that there is, yes. I think that there are two known arbitrages in crypto. So the first is that I think there's a lot of capital and there's a lot of quote unquote thought leadership that exists in the West, but most of the users are in the East. And so I think that there's this gap between understanding who the real users are and what their motivation is, and then the people who are building these products. And I candidly think that we need to do a better job of bridging those two. And again, as I mentioned, I don't necessarily think that the profit incentive is a bad thing. I agree that with what you said. I agree with the point that there's never enough to satisfy everyone. But what I do think protocols can do is create a more fair and transparent, I guess, way of communicating with their audience by saying, if you do certain things over certain periods of time, then you will earn ownership, versus, teasing them with this 6-month airdrop. So that's point number one. And then I guess the second big arbitrage is like sort of stated versus revealed preferences. So oftentimes in crypto, there's this very loud echo chamber on crypto Twitter. And I have found that oftentimes it's not necessarily correlated to what actually happens on chain. So sometimes users will express a lot of pushback, but it's actually a vocal minority. And then the majority of users are doing different things on chain. There's just a balance between people who decide to take to Twitter and complain versus those who are maybe a little bit more quiet. And I think that that's also really important, because more recently we've seen, ZK Sync and Layer 0, there's obviously a tremendous amount of criticism around their airdrop. But if you look on chain, there is some sustainability and there is some retention. So it's really a balance between who are the loudest voices. And sometimes the loudest voices are what we call like a vocal minority, and what is reality, right? And so in some cases, when you receive pushback, it's your entire audience, it's your entire consumer base that's expressing that pushback. Other times, it's just a smaller percentage.
Yeah, and you just mentioned the East users like to do arbitrage and the speculations. So your team has any special strategies targeting this market?
We've spent a bunch of time in APAC broadly. I think the most important markets for us are Korea, Japan, China, Southeast Asia. And so I spend, roughly 1 week a quarter there, and we'll be attending Korea Blockchain Week. I'll be at Token 2049. I'm going to be spending some time in Hong Kong. I'll be going to DevCon in Bangkok. So we do spend a lot of time there. We're also actually hiring right now ahead of APAC. And I think that there are a lot of market participants in APAC more broadly. You've got exchanges, you've got market makers, but you also have most of the users. And so one of the things that we're going to start doing later this year is hosting meetups in certain cities, where if you are a user of our protocol, we'd love to meet you. And so we're going to do that in Seoul, in Hong Kong, in Tokyo, in Singapore. So yeah, that's one of again, there's a little bit of alpha there, but that's one of the things that we'll be announcing relatively soon.
So tell us more about the upcoming events, because you just mentioned you have meetups in Hong Kong and other cities. Do you have anything you can share with us more?
Yes, there's so much to share. So the first is, as our community knows, we have our token launch coming up. We're going to be publishing the exact date for that in the not too distant future. So please do keep an eye out for socials on that. We are going to be attending Korea Blockchain Week, and we'll be hosting a meetup there. So if you're attending Korea Blockchain Week and you'd like to come to our meetup, we'll probably announce that on our main Twitter account. We'll also be at 2049, and we're hosting a dinner there. And then on the product side, there are a few really, really, really exciting announcements that we're going to be putting out relatively shortly. I can't share too much yet, but we have one feature that is basically at the cutting edge of AI and on-chain analytics, basically creating a more opinionated experience for users when they come to layer 3. And then we have another feature that we're going to be releasing that aligns and enables our users to put their existing assets to work in a more productive way through our protocol. So there's a little bit of alpha there, and would obviously encourage you guys to keep an eye out on our socials and follow me on Twitter, and we'll be putting these announcements out over the next few weeks.
Well, so it's a lot. I think there are a lot to expected in the future, in the upcoming future. So also you mentioned AI, the AI model. Is anything that is still confidential, right?
It's still confidential, but at the end of the day, one thing I can say is consumers today in crypto, they don't have opinionated experiences. They don't have experiences that are tailored for their interests. And I think that that's a problem, right? Because so much of your digital experience outside of crypto is tailored to your interests. And so one of the things that we're going to try and fix is to really understand who the user is based on, their on-chain footprint, some of their off-chain footprint, and bring them an experience that is tailored to their interests and also tailored to their holdings. And I think that that is going to be a huge step function improvement for layer 3 in the future.
Yeah, I think I have a vague impression of this model because I used to work in Web2, so I kind of have my own imagination, but we will see. So I think that's enough for today's podcast. So Brandon, do you have any last messages you want to deliver to our audience?
No, but I'll say, look, if you're a layer 3 user and you're in the audience, please do get in touch. I love chatting with our users. If you have product feedback, if you want to get more involved in the community, if you want to meet up, again, I'm going to be spending a bunch of time throughout Asia in the fall. So please just get in touch. And this was great. I really enjoyed it, and look forward to hearing the podcast when it comes out.
Thank you for your time, and good luck for the upcoming event.
Thank you.
Thank you. Bye. Good evening. Bye.
Take care.